Microsoft and Amazon and Apple, lots to cover. So really excited to be here with you. And for those who don't know, the opening playbook happens every day at 10 a.m. Nate and Graham are the hosts, and it's a really valuable resource for traders. We'll talk about that more in just a little bit. But we are kind of invading and taking over today and expanding it to make it a full roundtable session, thanks to Nate and Graham's generosity. And we're going to do it because today is the Fed day, which, it's not that long ago that the Fed day was the most critical day in the markets, with the expectations of no rate changes. That's changed a little bit, but there's still big days, especially with the feud going on between Trump and Powell. So we'll talk about all of that today. My name's Stephen Ground. I am editor-in-chief with the New Money Crew. I'm excited to be here and be a part of this. If you don't know about the New Money Crew, we'll chat about that in just a little bit as well. So you're in the right spot. We're going to be giving away free trade ideas, a lot of actionable stuff today, and taking a lot of your questions as we go along. So thank you for being here. If you're new to roundtables, especially would love to say hello to you. Let us know in the chat. And I know we see a lot of familiar names that have been at many or even all of our roundtables in the chat too, and happy about that as well. Welcome in John, Bill. Devi, good morning to you. David, good morning to you. Glad that you are doing good, and thank you for being here. All right, well, let me dive into some things to help us set the stage here today. If you were just tuning in, we are hosting a very special combined opening playbook and roundtable session today. My name is Stephen Ground. I'm the editor-in-chief at New Money Crew, and I'm thrilled that you're here with us today. This photo, honestly, just kind of makes me chuckle. I can't deny it. It makes me laugh a little bit. I feel like no image better captures the strange and Looney Tunes kind of world that we're living in than this one, with President Trump and Chairman Powell touring the renovations at the Federal Reserve last week. If you're here with us today, I'm sure you're well aware that today is Fed Day in terms of the meeting and announcement of the rate change. This afternoon, the Fed will announce the interest rate, and Chairman Powell will give a speech and short press conference. I'm sure you also know that as of now, 98% of traders are expecting no rate change, according to CMA Fed Watch. Wow, that was easy for me to say early in the morning. The math's not working yet. And now Bank of America is saying no rate cuts all year, according to their projections. But, I do have to confess, and maybe this is an unpopular opinion for some, I actually think the Fed has overall done a pretty good job of tackling inflation over the last few years. And with where inflation, trade negotiations, the global economy are at, plus, the threat of even more money coming into the system with this new potential tariff rebate that they're talking about in Congress, I think no rate change makes a lot of sense and may be the best outcome at this point. But just because rates are unlikely to move, that doesn't mean we can say the same about the markets. As anyone who's been around a while knows, with ongoing tension between the White House and the Fed, Powell's speech could create shockwaves in the market that could, move stocks, move the entire index with one or two misplaced or maybe intentionally placed words, depending on how he's going to navigate the political pressure of it all. And to help you get through that, we've thrown open the doors to our experts and invited some of my favorite traders to be here with us. And so let's get to know them, starting with the two regular hosts of the opening playbook. That is, of course, Nate Tucci, who's got over a decade of experience trading everything from Forex to stock to crypto and beyond. He's worked with dozens of the world's leading experts, helping them refine and develop strategies. He grew his investment and dividend portfolio by over $100,000 last year. He created the income machine that is taking over the world right now. It's a really incredible tool. If you haven't gotten to use that, pay attention and pay close attention the next time he talks about it because it's powerful. I just closed a winner on it with AMD last week. And he also hosts the opening playbook Monday through Friday at 10 a.m. His co-host in that endeavor, Graham Lindman, is an options expert with over a decade of experience trading the markets. He studied technical analysis under two of the top minds in finance, business, developed and popularized wrap orders, options trades to help traders cut their entry costs and control risk. And he recently perfected his 60 minutes trades and shared them with the world. Those are also incredible. And I also had a successful 60-minute trade yesterday. So a lot of success owed to these two guys. And I am not alone in that. If you're not a regular attender, I encourage you to add it to your calendar because our hosts are really good at what they do. And we're going to dive into a little bit of what they've done in just a minute here. But today, they've graciously opened the doors to let a fleet of other awesome experts in, including Jack Carter, one of my favorites to work with, the income ace who's been doing nearly 40 years of generating premium in the markets. He's earned that name. He trained on Wall Street at Dean Witter inside the World Trade Center. He managed his own fund so successfully that he never saw a losing month on record. And he just released a new trading tool, Cash Flow Agent, that he's going to be sharing with us later today. He's actually going to share a free options trade with us by the end of this presentation. So you're going to want to stick around for that. Then we have Kane Shieh, who's a former PIMCO VP portfolio manager. He's helped manage $1.7 trillion in assets, including for companies like Disney, Google, Apple, and more. He traded $200 billion in daily volume on average, and he's traded with legends like Bill Gross, the Bond King, and Mohammed El-Erian, the Allianz president. He discovered Gamma Pockets, which brought him back into our family. He's been a student of Rogers for a long time, and he's one of our favorite guests on the roundtable. We've also got Alex Reid, who's been trading and investing since 2018. He studied economics in college before graduating to test trading strategies for $1 billion financial research fund. He's had some incredible, big market calls, including the Silicon Valley Bank collapse all the way back in 2022. And he recommended Palantir to his readers a long, long time ago before the AI boom when the stock shot up 691%. Honestly, that number probably needs to be updated because I'm sure it's up more since then. And we've got Jamie J.D. Dlugosch. He's traded and invested for 38 years. He is the rational trader. You're going to love what he has to share if you haven't seen him on one of these before. He innovated the Two Sigma system and which is designed for identifying undervalued stocks about to bounce. And he loves to harness market volatility using technical analysis, quantitative research, and his nearly 4 decades of trading experience. I will be here to take your questions and guide them through it all. Again, I'm Stephen Ground. And I'm thrilled about the panelists who are joining us today because these guys are doing great things for their subscribers right now, delivering real results. Last week, JD closed a humongous 233% winner on HIMS for his Two Sigma trading students. You can see the chart there. Kane's built an unbelievable track record in his morning payouts program, talking about scaling results. I'm sure he's going to go into that a little bit today. 44 winners and 13 losers, a 77% win rate, and an incredible net profit of 18,000 since that launched to the world, I think no more than 3 or 4 months ago. I'd have to look exactly, but it's not been out there super long and it's delivering huge results. Alex has been giving away winning trades on his Telegram, 50% on Hood, 20% just in this little screenshot here. And then, of course, Jack built the brand new cash flow agent that he's going to be telling us more about later on. He's going to be sharing a specific options trade with all of us, which I'm really excited to dive into. And as for our two hosts, well, I can attest to their results personally. As part of the New Money crew, as I told you earlier, I closed a 50% winner in about 2 hours on Graham's 60-minute income yesterday. And the full track record for what he's doing is even more impressive. And then Nate's income machine delivered me a nice win automatically on Friday on AMD as well. So both of those have done great things for me. Nate may share another income machine trade idea with us all in just a little bit. But I'm certainly not alone when it comes to benefiting from the New Money crew trades and traders, and especially from these guys on opening playbooks. Look at some of these wins they've shared in recent opening playbook additions. That huge win on NVIDIA, a big one on AMD there on that screenshot. You've got this move on Google that they called GEV up nearly 10%, as they talked about. And you have this page of incredible winners and a couple of trades that went against them because we're always honest that, anything can happen in the markets. We're being transparent. But look at the ANET, the GE, XLC, Shopify, Broadcom, all of these incredible results here goes to show that the value is in coming to the opening playbook. And here's another one: Oklo, CME, Lulu, Spotify. Unbelievable results. So if you haven't joined the opening playbook before, remember, welcome. We're glad you're here. We're taking over the opening playbook session today, and I am going to drop a link so that you can sign up for the opening playbook every day. It's completely free. So let me put that in the chat right now. And there you go. You can click that. It is totally free to join every day. One of the most valuable researches, one of the most valuable services that we can provide for our traders. And it's really part of the work we do with the New Money Crew, which if you haven't heard a lot about the New Money Crew yet, it's pretty brand new still. It's something we're working on to really deliver more value to you guys for free for the daily classes, whether it's opening playbook at 10 a.m. Or crush the close with Lance at 2:30. We are really working on delivering a lot of things. We're building some things out that we haven't even shared yet. And we also have this incredible scanner that we get to dive into each and every morning. And I have the honor of sharing each morning's pick in the New Money Crew newsletter. It's one of my favorite trading tools ever, and I would love to pull it up right now if I can. Let me share my full screen here so you can see the whole thing. This is the New Money Crew scanner right here. So, as part of the New Money Crew, it's a free newsletter. I'll drop the link for it in a second. If you do want to join it, you're going to get these scanner picks every day. What Nate did basically is combine the top entry indicators of himself, Graham, and Lance into one incredible tool. You can see it here. So today it's pulled up NVIDIA, which obviously has been soaring for a long time and is really strong right now. Walmart is here. And then G&W is an interesting name that has been on there as well. It's a financial services company that had a $750 million settlement in their favor last week or earlier this week. I'm losing track of what day is what, but an interesting $8 stock there. And then if you dive under the hood here, which Nate always tells me I'm not supposed to show you, but I like to give you guys the behind the scenes pictures. It's got a really deep dive here into stocks that are meeting some of the criteria, not all of the criteria, but that doesn't mean necessarily that, for example, AVGO isn't a good pick just because its seasonality score is low. It is hitting these other criteria and is very strong. So every day at around 9:30, I send out this newsletter with those top three picks for you to get your day started, and then you can come right into opening playbook knowing some of the potentially strongest stocks for the day. And then around 12:30, I send out my favorite pick for the day. So I do a little bit deeper dive, often one of these ones that you don't see in the early newsletter, and share, what I'm looking at, what I'm interested in. Occasionally, I'll share even a trade alert with it. So if you want to be part of that, you can go to newmoneycrew.com/sign up, all totally free. And be part of the New Money Crew because we're very excited about what we're building there. So thank you for coming to my TED Talk on that, but had to share that with you because I'm super excited about it. And let me go back into these and finish getting us ready here. Uh, like I said, you get the top three picks. Then around 12:30, you'll receive the personal favorite pick of the stock for the day, and it's all totally free. But like I said, not here to toot my own horn or even the New Money Cruise, although I do love what we're doing there. I do think this could be a really transformative session for everyone here today, a chance to learn from experts and take advantage of a huge opportunity in the market. So we're really here to serve you. So let's hear from you in the chat. Let us know your name, where you're coming from, what you expect from today's Fed meeting, and most importantly, start sending your questions for our experts. We're going to kick off at 10 a.m. officially, but Deanna and I will be here helping you get ready. So welcome to the Fed Opening Playbook Roundtable. We're very glad you're here. Here's another look at our fantastic hosts. Love that we have so many folks joining us early in the morning. Let me see if, oh, well, probably the link isn't working because I didn't type it right. So excuse me, everyone. I will type it again and get it correct this time. Um, this is why you don't let me do things before 10 a.m. Let me check just to make sure that one worked just fine. So sorry about that. Thank you for letting me know. But yeah, like I said, happy everyone is here. Glad we are doing this morning on a really important day in the markets. Uh, Things have been very interesting all year long, and I think they're going to stay that way. But today, in particular, with the Fed meeting, you can never quite know what's going to happen. So I'm really excited to have our experts break it down. And like I said, we also have big earnings coming up from Microsoft, Meta, and some other great Mag 7 companies. So there's just a ton to talk about right now, and we've got the best experts here to break it down. So say hello in the chat. Let us know where you're coming from. If you have questions for the experts, Darkwing says lots of coffee, Steve. Yeah, that was my caffeine boost sip that I just took there. So thank you for that. And I definitely need it. Good morning from Colorado Springs, Sharita says. Welcome in. Thanks for being with us here early in Colorado Springs times. I hope it's beautiful out there, maybe a little cooler than it is here today. Debbie says, good morning from Kansas. Welcome in. Rhonda also recommended some coffee. I need it, obviously. I need to get some before we get started here, but I've got a little soda caffeine boost here, so it'll help me power through. Roger says hi from upstate New York. Thank you for being here, Roger. Welcome in. And let me know, folks, if you've been to a roundtable before or not. Certainly, if you've been to an opening playbook before, which I hope you all have, because it really is such a valuable research. So, such amazing stuff that Graham and Nate are doing here. Napoleon says, good morning from Cape Cod. Welcome in. Love to have you here. And thank you for being here. Connie says, good morning from Minnesota. Good morning, Connie. Hope you're having a good day up there in Minnesota. Thank you for being here and tuning in on an early morning in Central Time. Welcome in. Bobby from South Jersey, welcome into you. Thank you for being here. A lot of great folks tuning in today. And I honestly haven't even gotten to look at the markets this morning yet because I was getting prepared for this. Looks like we're about break even on across the board, which is to be expected. Um, I think everybody's going to kind of hold steady and anticipate what's coming at 2 p.m. Uh, the U.S. economic growth rebounded in Q2, which is a good news, good symbol overall. But we'll see how that's kind of framed up and talked about with the Fed meeting today. Jay says, good morning from Sparta. Welcome in. Jay, thanks for here. Thanks for being here. No link in one quick trading for this MCP. I'll make sure that we grab that and I'll let people know here. Let me do that right quick. I sent that to the team, so hopefully we'll get that fixed. Morning from Chris in Arizona. Welcome in, Chris. A lot of folks tuning in from out west, so thank you for being here early in the morning for all of you. Appreciate it. I suppose if you're a trader, you kind of have to start your day when the opening bell rings, wherever you are, but we still love that you're spending time with us and tuning in to what we're doing. I thought it was really interesting. I mentioned earlier, Bank of America is projecting no rate changes at all this year. Let me look at what the Fed Watch is saying going forward in terms of whether it projects anything for September. Yeah, in September, the Fed CME Fed Watch is still saying 57% of folks expect a 25% drop. Really, almost 60% of folks expect 25% or a 25 basis points drop or more in September. And then folks are expecting more rate cuts after that. So we'll see. Obviously, the Fed had talked about rate cuts coming this year, but the reality of tariffs, the economy, and things have changed that. Like I said earlier, I think honestly, I know it's not always popular to say this, but I think the Fed has done a pretty decent job of managing things, keeping inflation, not under control in the sense of being eliminated, but under control relative to what it had been for a long time. And, the balance has been pretty okay so far. I would love rates to come down because I bought a house a couple of years ago and have been suffering the consequences ever since. So, personally, I'd be all for it. But I think with the economy where it is, it makes sense to hold steady for a little while longer and see how things go. Let me see. Samuel, I don't know if I can do that. I can ask about it. But I will let you know on that one. Deborah, welcome from Kentucky. Thank you for being here. Gary says greetings from Lompoc. Welcome in, Gary. Thank you for that. Got a lot of folks tuning in. Yeah, Deanna says it's going to be a big room today because so it'll be a little distracting maybe if we have the whole uh, team chat, but she'll check with the team. And like I said, everyone, we are expecting a huge room today for the first opening playbook session of the year, or not first, I don't know what I'm saying, the combined opening playbook roundtable session. And very glad that you all are here. Let me throw the opening playbook sign up one more time. If this is a good time for you to be paying attention, then it's a great resource. 10 a.m. every day, 10 a.m. Eastern, to start your day with Graham and Nate. Like I just walked you through here, I can show again. They are absolutely crushing it for the folks who do attend every day. You can see some of these trades that they've had in the recent past. Look at this page with ANET, GE, XLC, Shopify, Broadcom. Sure, some trades have gone against them, but they deliver incredible results. And it's really not just about, winning trades, although those are fun. It's about being part of that community, building up that relationship with those guys every day, and really learning from what they have to share because they do some really deep dives, some incredibly important lessons on things that traders need to know about. I've learned a ton just from being there day after day. So I hope folks will sign up and be a part of that. It is something awesome that they're letting us kind of invade and take over today, but they're going to keep going after it tomorrow and every day going forward when the markets are open. So appreciate them for letting us on here and really looking forward to getting this kicked off in about 5 minutes here. Um, so let me see here. Let me make sure. Got a couple messages I want to read and make sure we're good with everything going on right now. Excuse me. Uh, yeah, 5 minutes till we get started here. And Dave says hi from east of Toronto. Welcome in, Dave. Hockey country out there. Big hockey fan myself. I guess it's stereotyping to assume that you are too, but that's what I hear about Canada. So I hope you're having a good summer and enjoying things out there. He says good assumption. So thank you, Dave. I felt like I was pretty safe there, but didn't want to, ever cast aspersions on anyone. But thank you for being here. Glad that you're part of the roundtable session today. Um, and yeah, I'm really, really just looking forward to this. Can't wait for the guys to hop on here in a second. Have a big room of folks ready to learn about the markets and dive into some really interesting stuff that we've got to share. For those who are just tuning in, my name's Stephen Ground. I'm editor-in-chief at New Money Crew, walking through a special roundtable session for the opening playbook today, talking about the Fed, talking about big earnings on the Mag 7 stocks that are still coming up, and answering a bunch of your questions. We're going to give some live actionable trade ideas. Jack is going to share some specific options trades that you can potentially jump into if you so choose before the end of the presentation. Thanks to his brand new cash flow agent. So just a lot of really awesome stuff. We're glad you're here. We're glad that you're a part of this. We are really working hard all across our company to deliver more events like this, whether it's the opening playbook, crush the close, profit panel, everything these guys are doing. Um, every day to get you more value, more education, more trade ideas, all for free. Obviously, we as a company would love for you to become members and join some of our great programs, and we put a lot of hard work and effort and pride into those as well. But we really want to deliver results to folks and kind of prove our value to you directly through these events and free education. And I know a lot of you folks have had really good experiences, so I'm preaching to the choir in some senses. But just for folks who might be new, exploring things for the first time, we really want to give a ton of value in sessions like this. So I think you're going to have a wonderful time this morning. If it's your first round table, I think you're going to learn a ton because I certainly always do. And I've been working with these guys for a while now. So really excited to hop in here. Wreck-It Ralph says Galveston Bay in Texas, it's 91 degrees already. My watch says it's only 84 in Jacksonville, but I don't believe that. It's been meltingly hot here for weeks, which is the usual in Florida. I feel like in Florida from let's say about September to April or May, I think. How could anyone live anywhere else other than Florida? And then from June to August, I'm like, how has anyone ever lived in Florida or survived here? Um, so, that's the cycle of the year. Hopefully, folks aren't all melting today. Some of them have better temperatures than here. It says a balmy 55 degrees in Homer, Alaska. There we go. I wouldn't mind that personally today. I wouldn't mind the switch up, but I'm sure it's beautiful out there. Jody, yes, this will be recorded. We record these sessions. Deanna will have it on YouTube, I believe, before too long after we're done. But stick around because we are going to have some actionable trade ideas live and in real time. So those might not be as valuable if you access the recording a few hours or certainly a few days later. But yes, it will be recorded. Jimmy says extreme heat warning in Tennessee today. Yeah, I can believe that. So sorry about that. I did hear, Jimmy, recently that Tennessee is getting In-N-Out burgers in the just near future. So, maybe you can look forward to that, get through this heat wave. But yeah, glad that you are here. Welcome to Peter. Welcome to Jackie. A lot of temperature updates from across the country. And now we've got folks joining us from across the country, our experts hanging on this or joining on this morning. Welcome, guys. How are you doing this morning, JD?
Good morning, good morning, good morning. Excellent. Wonderful day today.
Good. Glad to hear it. And Alex, how are things in Virginia?
I'm good, man. How you been?
I'm doing great. I'm really excited for this. Can't wait to dive into a bunch of really awesome stuff, some huge opportunities. Nate, you are the traditional host of Opening Playbook, as I've been kind of beating people over the head with today. Thank you for being here. Thank you for opening your little home to us at 10 a.m. every day. How are you doing this morning?
I'm doing well. Thank you for commandeering Opening Playbook and providing some extra value. We appreciate it. Thanks everyone else for jumping on. We're excited. Got a big session today. I'm pretty excited because we're going to cover I think a lot of ground. I got to see a couple of the notes, and so a boring Fed day where we're not expecting a whole lot might not sound that exciting, but I actually think there's a lot to take away here. So I'm looking forward to it.
Awesome. I've made it my mission in life to commandeer as many things as possible because who doesn't want to commandeer things? Graham, like I said, you're the other host of the opening playbook, so thanks for letting us in here. How are you doing this morning?
Doing great. This is fun. I'm glad we're doing this and getting some new faces in here and getting some different opinions as well. And to Nate's point, it's a very, very boring time in the stock market. There's no big earnings coming up this afternoon, nothing big tomorrow either. So it's definitely a dull time.
I said boring Fed expectation,
Okay,
Graham.
Nate. Okay.
Boring Fed expectation. Jeez. Don't
Oh,
you
that,
don't you hate those guys who misquote you? And that's just the
Yeah.
worst.
I would never do that to you, Nate. I think my record is clear on that. Kane, welcome into you as well. Thank you for hopping on here early on the West Coast. Appreciate that. How are you doing this morning?
I'm doing well, a little tired. We had a tiny tsunami scare last night, so I was up monitoring that. But otherwise, I am doing well and looking forward to our discussion today.
Good. Well, glad everything is safe out there. Glad that you made it through, and thank you for braving the lack of sleep and joining us this morning. Jack, out west in Colorado, how are you doing this morning?
I'm doing great, Stephen. How are you? Good to see you.
I am doing fantastic. Really looking forward to talking with you today. And I know you're going to be sharing an options trade with us a little later on as well. So looking forward to hearing that as well. All right. Well, thank you everyone for being here. Welcome one more time to an expanded opening playbook roundtable session. Glad so many folks are joining us this morning. And I want to dive right in with kind of a lightning round question for each of our experts. And Kane, we'll start with you for these, if you don't mind.
Sure.
The question is kind of what do you make of the Trump Powell drama as far as what, how it could impact the markets? And do you think today's Fed meeting is going to have an impact, or is it more, kind of a focus on the big earnings that we're seeing as well come through?
Yeah, good questions. First, Trump Powell. For me, it's a giant distraction. I mean, is that tradable? Is that going to give us a great edge on something? The answer for me, I don't know about the other guys, but for me, I don't have a way of trading that. And if I don't have a way of trading it, I'm not going to pay attention to it. It's just a distraction, right? So I need to keep my focus on the opportunities that are actually in the markets and not really care about that stuff. That's for entertainment, not for trading. And as far as today's meeting, well, it's pretty much priced in. And so unless they surprise us and give us something that's completely different, well, basically, if they actually do a rate cut or even a rate hike, that would shock the market. And so we'll have a big move. But otherwise, if they just don't do anything, then there's not going to be a huge reaction. There will still be volatility because the word choice, when Powell comes out and actually does the press conference, that's going to be important. That's going to be heavily analyzed. They're going to run AI on the exact wording versus what he's said in the past. And that could introduce some volatility. Not necessarily a lot of directionality, though.
Okay. Thank you. Graham, how about you? What do you think about those two questions?
Yeah, same sort of thing. I don't think there's like a 99% chance that there's no rate cut or hike today. The forecast will be the most important part. For me personally, like preliminary GDP came in positive this morning. I don't understand. I don't think Powell will change his tune. I don't understand why he would. It's like, we're Patrick Mahomes and we're in week 8 of the regular season and you have 8 cortisone shots and you use them all for fun. There's no reason. You want to save those for the playoffs when you actually need them. So
Yeah. Yeah, makes sense. It was interesting. I saw Bank of America projected no rate changes this morning going forward all year. But if you look at the Fed watch, a lot of people are still expecting them to come as soon as next meeting. So, Nate, where are you at? How are you feeling this morning?
Oh, not to say the same boring thing, but yeah, I mean, I think kind of baked in, not a whole lot to take away from it. As Graham and I talked about yesterday, like I think a little bit of noise right now. I think earnings are what actually matters in terms of catalysts for the immediate term, and to see not just the earnings, but how people respond to the earnings. One of the things that I always think is kind of the best indicator for sentiment is just how much people require out of earnings. We've seen where, mediocre earnings get the job done and people are buyers, meaning sentiment is normally pretty good. They're not requiring a whole lot. And we've seen a sentiment where earnings have to just be absolutely incredible to get anyone interested. And so I think that's one of the better indicators you can get. And with the big dogs coming, we'll get an opportunity to kind of see what the reaction is to those earnings. So I think that's what really matters this week.
Awesome. How about you, Alex? I know you pay some attention to the drama in Washington. What are you thinking?
So first, I don't know if anybody watched Trump visiting the Federal Reserve building when they were doing the construction and watched the clips of him and Powell talking, but it was like a comedy skit. It was like The Office or something. It was
Yeah.
hilarious. But also I am in the Nothing Ever Happens crew. War with Iran, nothing ever happens. Epstein, nothing ever happens. Federal Reserve shenanigans, nothing ever happens. Nothing ever happens, man. I'm not worried about this today. It's also priced in that nothing's going to happen today. I think rates are just gonna stay. I don't even like really see why we would cut down the road this year. I know that the September is, more likely than this today, but obviously I just don't think it's gonna happen. I've been reading some interesting stuff about this guy Werner. He was on Tucker Carlson, and he was talking about how he basically the way we think about interest rates and GDP and growth is actually the backwards, whereas interest rates actually don't lead to growth or degrowth. It's actually the growth that leads to the interest rates. So if we're having higher growth, which I think we will, I think the GDP is showing that this morning, plus all the investments into the US. In this theory, and I need to do more research, but it would be that rates stay higher. So you don't actually need the rates to come down. So I think this is probably going to do just about the same.
Interesting. Awesome. And JD, good morning to you.
Good
Welcome
morning.
in. I know I already said that, but how are you feeling about today's Fed meeting and even potentially the earnings we've got coming up?
Sure, I'm probably the contrarian in the group. I'm optimistic that we're going to get a supremely dovish Federal Reserve meeting. I actually think we could see a rate cut today, and that could be a massive surprise. It's justified. He has support of certain governors on the panel that are in favor of cutting rates. There is a deflationary bomb that has been, the fuse has been lit for several months. When that bomb goes off, it will show how woefully behind the curve they are. Currently, the Federal Reserve discount rate is in restrictive territory, and there is no justification, zero justification for being in restrictive territory. Powell, I'm not going to blame Powell. I'm not going to blame Trump. They're both in part to blame for the morass that is happening in terms of policy. Powell backed himself into a corner when he reacted, and he shouldn't have reacted to Trump's, 5,000% tariff Liberation Day statement. And he was rightfully concerned that, God, is this guy a nutcase or what the heck is going on? But once he backed himself into that corner, he's been having a really hard time getting out of it. And so, Trump is, kind of created this mess because he did start with his classic, way out there extreme statements, and then he backs off, which is what he always does. Now the market sniffed that out, thankfully. Similar to Powell, the market overreacted on April 2nd, but then it obviously came to its senses since then.
Awesome. Well, we love the contrarian takes here, so thank you for that.
Yeah, hot take. That was nice.
Yeah, I'd love to dive in a little deeper.
I love that we don't have, everyone being boring. That's great. Thank you, JD, for breathing some liveliness.
Well,
into...
the guy that goes out on the limb often gets chopped off. So hopefully that doesn't happen. But
Yeah, we'll see. That's very cool. And last but not least on the lightning round, Jack, how are you feeling this morning?
I'm feeling great. How are you feeling, Stephen?
I'm feeling wonderful. Thank you.
I'm loving it. So with Trump and Powell, I pay zero attention to it. Same thing with Trump and Musk. I just there's no trade there, like Kane is saying. There's no impetus. It doesn't set up anything for me. I don't think Powell's going to cut rates simply because Trump wants him to, and he's still trying to show his independence, and so he's not going to do it. But like Alex said, I did see a little bit of that clip when they were walking around that construction, and Powell just kept saying, "I never saw that before. I never authorized that. I didn't see that." I mean, Trump really made him look. Guys in a suit and a hard hat. I can't pay attention to that. So I'm just not into it, and I think Trump wants him to do it, and because Trump wants him to cut rates, he's not going to cut them.
Jack, are you saying that Powell's not a man of the people? Because I don't know where you could get that take.
I'm saying he's not a man of the people. Yeah, not a man of the people. As I said before, I'd rather have Thurston Howell from Gilligan's Island as the Fed than Jerome Powell. So, that's just me. He knows more about money. Thurston Howell did, that's for sure. So that's that. But the focus, I think Trump, they're starting to just tune him out. Like right now, if he said the word tariff, nothing would happen in the market, right? It's just people overreacted on Liberation Day. They threw the baby out with the bathwater. Everybody regretted doing that. I was buying when that happened, but I don't see any big turbulence like that from a rate cut or definitely not a hike. And the focus is really on earnings right now, and that's where I think it's at. I'm waiting for the big text to come out, and I can't wait for that to happen. I think earnings are going to be mixed across the board, right? So the other thing about the earnings is it's really not the earnings that people look at. It's more they're listening for the guidance. That's where the real reaction happens. A lot of these times a company will beat an earnings estimate. That's not uncommon. And then they'll say something not so good about guidance, and then the stock turns around. Or they'll have negative earnings or not so good earnings, and they'll talk about guidance, and everybody will buy the stock even on bad earnings. So that's the thing I'm looking for, the earnings and the guidance. But the Trump and Powell stuff, I don't have time for soap operas, man. I'm up here fishing and riding motorcycles. I can't be watching grown men act like little girls.
Love it. Well, thank you everybody for that. And for those who have never been on a roundtable before, we are now going to jump into a session where each of our experts gets to kind of run through what they're looking at in the market, maybe some actionable trade ideas you guys can take, which I know Nate and Graham share pretty much every opening playbook. So I'm sure they'll have some for us as well today. But Jack, I want to come right back to you and let you kind of dive into anything you want to talk about. I know you just shared cash flow agent with folks, and we're going to dive into a trade idea you have a little later on with that. But what else are you looking at? What should folks be doing right now? I know you're the income ace, so maybe give us some insights from that world.
People should be selling options. That's where the money resides, right there.
Let me tell you how shocked we all are to hear you say that.
Well, I just got to say, we were talking about this earlier, that the options prices are so high, it's ridiculous, right? Now, in the old days, if a stock made a 1% to 2% move, you'd see the options make a nice move, right? These days, we looked at an option, I think it was yesterday, that had 100% priced into the call. The stock would have to move 100%. And that's because the market makers in the options, they don't want to take this risk where they have to start playing with the actual stock. They just want to trade the option. But it's gotten so out of hand that if you're buying a call option on some of these stocks, the thing has to pretty much double for the option to move. That didn't used to be the case. But when options are priced this high, man, I've never seen yields like this in 40 years. I've never seen, this is the most I've ever made. I would do a credit spread last year, maybe make 7% on that. Now, same credit spread, same type of stuff, same cushion, everything. It's yielding so much more. And the naked put side, it's insane. I'm almost embarrassed at how high some of these yields are. And people look at it and they're like, man, I'm missing out on this. But like naked puts on Hood, naked puts on IBIT, ANET, that stuff has just been money. And I'm loving the options selling side of this market right here. Loving it. Loving it. Loving it. Loving it. Just not going to stop doing it. You got to make hay while the sun shines, right?
Mm-hmm.
Sun is shining on the options market, and I'm selling.
What should folks look for when they're kind of trying to isolate a stock to sell an option on or do a credit spread on?
That's a great question. The very first thing always is the trend. Absolutely, positively. You can't just go out randomly doing this on stocks. They have to be trending higher or you're just going to get cut up. So those three right there, you just put up Hood, IBIT, and ANET. They're in great trends. So for stock to have great options trades, it has to have a directional bias and volatility. The directional bias has to be a trend. Volatility should be a little bit more than the broad market. That way you're going to get a better price in the options. So I like to look at stocks that have a beta over 1 or closer to 2. and they got a lot of bounce in the way the stock moves, a lot of action, and you could trade the individual stock. But when you have that trend, you have such an advantage and many advantages. You got the trend, you could buy the stock, it'll probably go up if it's trending, right? You could buy the stock, sell covered calls, use that premium to buy, whatever, more stock or, a protective put. And then you can also do credit spreads, bull put spreads on this thing and naked put. So you got like 5 trades just because the stock is trending higher. There's like 5 things you could do to make money right there. And that's, but I'm all over it like stink on a monkey. I'm doing exactly what I just said right there. Just naked puts, long covered calls, the whole 9 yards.
Fantastic, Jack. Thank you. And I'm excited to dive into a cash flow agent with you a little later
Yeah,
on here.
that
Um,
thing should be illegal. I just got to say it is just it's it's out of this world.
Love it. Yeah, I can't wait to share it with folks in a little bit. JD, moving on to you for now. I have been looking through your Two Sigma track record recently, looking over some things where you're kind of identifying those undervalued stocks. I saw you had a massive 233% winner on HIMS for folks on the options. I think the stock even moved like 20% on that one. So maybe share folks what you're doing there or anything they should be looking at on that side, and then just anything that's on your mind.
Sure. Well, thank you for having me. Appreciate the opportunity to share. The formula for Two Sigma is very simple. The idea is to follow and trade highly rated stocks and use 2 standard deviations above and below the mean and reversion to the mean as our guides. And on HIMS, we had a stock that was showing great revenue growth, great earnings growth, and we're agnostic to the reasons why a stock may be trading below 2 standard deviations below the mean. But when that, it's like fishing, right? When you've got a fish on the line, you feel that bite, and we just set the hook, we place the trade, and we have confidence in the process, the formula to deliver the results. Now, the last couple months have been really interesting, really since April and all of this volatility from and then the subsequent rebound. So after Liberation Day, what you had was a very correlated market where everything was just going up. And from a Two Sigma trading standpoint, that didn't lend itself to a lot of trading opportunities. So it's been very it's been a dry hole to an extent. I mean, we're still placing a fair amount of trades and we're placing winning trades. But what I really like to see, and others may describe it as a boring market, it's this kind of market where each stock for itself creates the Two Sigma opportunities that we're looking for. And so we placed a new trade yesterday on Philip Morris International. We got our green diamond buy signal confirmation to see that reversion to the mean take place. And I think the number of stocks, I mean, I'm starting to fall behind, right? Because there's so many stocks on my watch list now, whereas a month ago, that wasn't necessarily the case.
Yeah, I love that. Are there any that you want to share with folks that are on your watch list right now?
Well, I can one in particular that we've traded before, and this is interesting because I think there's some wonderful option writing opportunities on this one, and that is Sprouts Farmers Market. The ticker symbol is SFM. This stock has been drifting to 2 standard deviations below the mean. We haven't seen the green diamond flash yet, but we're close. It is a highly rated stock. This company is seeing margin expansion, revenue growth that is above trend, and looking for an earnings report. Let's see, when do they report? They report after the bell today. So from a option writing standpoint, if I just quick look at my chart here, give me a second to look at it. And what you have here is what folks need to remember about two standard deviations is that 95% of the time a stock is going to be trading in between those bands, right? The lower band and the upper band, okay? It doesn't guarantee anything. It's just a guideline that I use, just like calculating pot odds when you're playing poker, okay? So today we have Sprouts Farmers Market just about $1 away from two standard deviations below the mean in advance of its earnings report. As Jack noted, the premiums are super, super, super rich on SFM at the moment. And so I'm looking at doing a put credit spread on Sprouts Farmers Market in advance of earnings. I'm looking to do a 2 sigma buy the stock. And if I buy the stock, I'm going to buy a simple call option as well. So you kind of got the combo platter there on SFM today.
Love that. I've been visiting a Sprouts pretty much every weekend, and if what they charge me is any indication, their business is in great shape. So I'm keeping them strong all by myself. Thank you, JD. Excuse me. Thank you for that insight. Really glad you are a part of this. And let's move on for now to Alex. Alex, what are you seeing in the market right now that you want folks to know about, and what can we learn today ahead of the Fed meeting and big earnings plays?
Yeah. So it's pretty interesting. In terms of like plays, I'm not really going to change anything. Like maybe, I don't even know what are we doing today on SPX? Like maybe just maybe do a credit spread, at like a low. I think we're probably going to rise after the Fed meeting, because nothing's going to change. So it's just going to be a default rise. I might take like a put spread here after we get off and just try and ride that. And then just watch it in case, it goes the opposite way. But there's really, I think nothing's changing from the regime we've been in for the last, over the summer, especially since April. I think we're just gonna keep grinding higher. We're just gonna keep on if you're in my Telegram, you see all the unusual options flow app I built. I mean, we just been following that and like just day trading these cheap options for like 20 cents per contract and just making like 20%, 50% gains like on the day overnight. We're just gonna keep on doing that. Nothing's gonna change on that. And also, what's interesting on a more of a macro level though, is the dollar index is actually breaking over the 50 EMA again. So DXY. So it looks like we might have a dollar breakout, and this is on the back of stronger growth, right? The GDP numbers. I think these tariff deals have made the US stronger vis-a-vis its competitors like Europe and Japan. So I think the dollar is going to strengthen. I mean, I could see a rise. Right now, we're basically at, for the dollar, we're at 99.995, 99.46. I mean, I could see us get back to 100. So, how do you play the dollar DXY, right? You could trade it, right, on the underlying shares there. Or I think you can trade that. I've actually never traded, but you can do. What I've done is UUP. UUP is basically the Invesco USD index. It's the bullish fund. So it's basically the dollar strength averaged out against like 10 other foreign currencies. So that's been on a nice little breakout recently. And I'm going to be looking after we get off here after this GDP report. I'm going to be looking for it right now. It's at 27. I might be looking for some calls at like 28, maybe even 29 or so, because I do think we can retrace basically the April retracement, the April sell-off. So other than that, like what Jack said, like we're just options farming. If you're in my Telegram again, we're doing selling these premiums. We're just aiming for like six premium yield harvesting trades every week, man. We're just like raking in the premiums. There's some juicy stuff. Like Jack said, it's juicy for selling premiums. That's what we're doing. So, we're trying to really what we're trying to do in the Telegram is we're just trying to take these, these really cheap options. We're just trying to have, follow the unusual flows and just ride those for the big, 20 to 50% winners intraday, and then set up some more conservative payout spreads with the credit spreads and whatnot. So kind of like a two-pronged approach. If you are not on my Telegram, you should be in it because you get them all for free.
Awesome. Yeah, we do need to drop those Telegram links, Deanna. If you have them, would love to get those dropped for all of our experts today. Thank you for that, Alex. Appreciate that. I can track down that link to you here in a minute, but let's go ahead and pass the ball to Graham. I believe I have you next. Oh, nope, Nate next. Sorry, excuse me. Nate, thank you for, like I said, letting us into Opening Playbook. I know this is usually your rodeo. Let me drop the link for the Opening Playbook sign up one more time for folks who want to do this every day. What are you looking at? What do you have to share with folks? And what's going on next?
Yeah, so I'm going to echo probably a fair amount of what Jack said with where we are. The beauty of the rising trend too, as you get into some of these more defensive trades, is how much protection you have. Like Jack, you'll love this. I have a Palantir credit spread that I put on. My strikes are 636, 638. The thing hit 660 yesterday. So I'm $30 clear on Palantir, and it's just like amazing when you're in those kind of defensive trades that are still paying 8, 10, 12. This one's actually like 24% ROI, and I'm $30.
When does that expire?
August 8th. So I've got another week, and I'm $30 clear.
$30. You got a $30 cushion?
Yep. So that's the beauty of a trend too, is you can kind of start out defensive and then get more defensive as you go along. And then I'm also going to give you, what I think is the most boring 1,000% ROI potential trade that I can think of. So if 1,000% opportunity can be boring, this is the one that it'll be. But the question kind of I want to try to answer is, where do we go from here? Because I think there is a lot of like very kind of high concern from people. Obviously seen charts like this a lot lately, which is the 2025 market overlaid with the 2008 market. I know Chris Pulver is one who's definitely concerned about kind of that second shoe dropping and a huge crash. And obviously that's possible. I personally don't see the big correction coming until 2026 or maybe even 2027. I think as a rule of thumb, we typically kick the can down the road further than people realize that we can. And so I would delay my expectations, but obviously that's very possible. You see the same overlay of a chart like 1999, which is a couple years before, and it looks, the overlay looks also very similar, but in this case, it squeezed higher. And so I think obviously, not to say the most obvious thing that anyone can ever trade or ever say about trading, but we could go in either direction, folks. There's your big, bold prediction from me. But just a couple things that I think are worth noting. Yes, we're technically overextended, but really that doesn't mean a whole lot. So the SPY averages about 16 new all-time highs per year over the last 75 years. So the most common thing to happen when you hit all-time highs is that over the course of time, you'll kind of keep knocking out some more all-time highs. Buying the SPY exclusively on days where it makes an all-time high actually outperforms buying the SPY on pullbacks on kind of a swing trading standpoint. So buying literally at the all-time highs is typically a pretty good strategy. And then a 10% correction within 1 year of all-time highs actually only occurred 9% of the time over the last 75 years. And we've already seen it twice in the last 2 years. So if you're playing the odds, then you would expect that actually we're probably a ways off from a 10% correction. Now, again, I think the market is we've seen those liquidity flushes happen more often lately. So I'm not sure I would totally base the last 75 years as your rule of thumb going forward, but just as a kind of something to keep in mind in terms of how resilient the market has been historically. Just don't assume, hey, we hit all-time highs, start buying puts. I think that's too aggressive of an approach to take. So let's jump into a super boring idea that actually does hit on the Fed and all the talk. And if you think that Powell, is going to be replaced by someone who is going to start that rate cut cycle, be more aggressive with it than people expect, well, then you could look at something like TLT. I told you we were going to go boring. TLT, that's about as boring as you can go. What you're looking at all the way on the left here is basically the peak of TLT once we cut all the way down to like 0% interest rates, where it was up at $136. And so if you think that Trump is going to try to continue to get surpluses, we're going to get more aggressive on the rate cuts, and we're going to get a really healthy bond recovery, well, then you could do something on TLT that trades over the next basically 2 years and see a rebound somewhere in the middle of this. So that trade would look like this. You could buy to open the January, that says 27. Sorry, that should say 27 as in the year 27. There we go. Let me fix that. January of 27. There we go. 105 and the 110. That's a $5 spread that you could pay about 37 cents to get into. And this yellow line is the level that it would have to get back to over the next 18 months in order to pay. So just let's flip over to our handy dandy calculator real quick and put those numbers in. So it'd be a 105, 110, and we're paying a 37-cent debit, which means your risk would be $37. Your net profit would be $463. And so if you wanted to say do 50 contracts and put in a target for 1,000% ROI, well, here's what you would do. You would take this trade. You would have a target of $4.07 on that trade, and that would give you a target of $1,000, and it would give you a max profit potential of $23,000, but a target potential of $18,500 if you wanted to put that in. So just to give you an idea there, and sorry, Steven, I was going to post this in the chat, but I took too long and you already did it. Thank you for that.
Hey, Nate, real quick question on your ROI calculation. How did you get that 1,000%? That was just off of the price that you paid?
Yes. So this is
it's a 1,000% return on your entry price. Okay, gotcha.
Yep. And then so in the max, this will be if you let it expire up here, would be the 23. Yep.
Got it. Awesome. Thanks.
So again, that's if you want to play, you think Trump's going to get those surpluses, you think we're going to get a cut cycle, and you think TLT is going to rebound as it does. Now, hopefully I don't need to tell anyone that 1,000% ROI trade is not it's not a very probable trade. Hopefully we all know that. I'm holding some TLT with just a tiny amount of size for that idea that, maybe it actually does become, an outsize. I don't even think you can call it a hedge. So it's like not even a hedge. It's just like a lottery play if the stars align and you get that move to sit somewhere in your portfolio. But my big takeaway right now, which I think Jack alluded to, is that regular option buyers are getting crushed. So this is the SPY ATR April 9th. It was like 28 on a 14-day, and right now it's 4. So the ATR from those crazy Liberation Day and then the rebound and all of that is 1/7 on the SPY. It was. So in just, a couple of months, we've moved down, we've grinded down the ATR, which means those poor people who are buying calls here and here and here and here are just getting dismantled by the average true range grinding down as they were paying the peak premiums. Now, to Jack's point, here's what's interesting. You would think that call options should be 1/7 the price that they were April 9th, right? Because the market is moving 1/7 as much. Well, newsflash for you, the market makers don't want to make it fair for you. The options are not 1/7. They are cheaper relative to ATR, but they're definitely not 1/7. Meanwhile, the credit spreads, that side of the equation has remained way more stable through the peaks and through the valleys because they have that offset built in where you're buying an option, so you're paying that juicy premium, but you're selling an option, so you're selling that juicy premium. As they grind down together, they organically balance out. So a much more stable approach, in my opinion, and that's my big takeaway. I think those defensive trades, those ones where you can actually get into a trade, and even if we do get a 2 or 3% pullback or a center point of the last week's breakout, you're actually still in winning position instead of automatically being in losing position. on that trade. And so I know Jack and Steve are going to go way in depth on, how that would work and kind of how a cushions trade, would be set up with still enough ROI to make it worthwhile. So I won't beat that drum too much, but that's obviously a lot of what I'm doing and what I think is kind of the best way to put yourself in position where, hey, maybe if the market does pull back 3% next week, and you're not then flipping your portfolio into, a whole bunch of losses.
Awesome. Thanks, Nate. A lot of great insight there. And I'll keep beating the drum of if you want insights like that every day, you can tune into the opening playbook at 10 a.m. All of the guys on this panel actually are doing some kind of show that gives you a lot of value. So make sure you check all those out. Now, moving on
it should. I just to Nate's, so it is going to be interesting to see what happens with that because Trump does not want the dollar to appreciate. He literally was talking to an interviewer yesterday. He does not want the dollar to strengthen because you can either export widgets or you can export dollars, and we've been exporting dollars since like the 70s. So like it will be it's like will the market forces push that dollar up with just the comparative advantage of the American economy, which it's a hard thing to play because he wants the American economy to strengthen, but that also is going to strengthen the dollar. But he also to strengthen the dollar in his manufacturing, he also wants the dollar to stay weak. So
yeah, well, there was a theory that he was going to try to lock in a whole bunch of deals. And then purposefully weaken the dollar, but it was already kind of too weak to play that strategy. So it will be very interesting. I think the dollar is going to remain fairly strong, whether he likes it or not. I think it's going to be pretty tough to have his cake and eat it too. Have surpluses, have all these strong, global competitive factors, and then say, but yeah, we really want the dollar to be weak. I think is going to be a pretty tough needle to thread.
Yeah. Yeah, I'm kind of in the same boat. So
for sure, that's
watch
a
it.
balance. Absolutely. All right, Graham, thank you for hanging on. And what have you got for us this morning?
Well, let me go ahead and pull up my screen. See if that works. All right, cool. One chart I came across the other day basically just shows the market maker implied moves for the upcoming month, which is cool to see. We have some increased volatility coming back. I think that creates opportunity. Obviously, we've got Fed today. We've got big earnings. We've got other big earnings all month long. CPI, all sorts of stuff. I do think that last week I told folks that I think we're a little too hot right now, and then the markets kept going higher, which was kind of shocking to me. But hey, it happens. But I do think we're at a point right now where it's kind of an unpredictable month ahead. Right? We've been propped up crazy since the April lows. Just been going without a real breather in sight. Meanwhile, we're still behind where Europe's at for the year. So we're still catching up. So it's just kind of a weird spot to be in where things could really go either way. And I don't think they're going to go subtly either way. Another look here is the presidential seasonality for first year term. August, September, you can see I've got them highlighted there, are both down. So typically you can see how it's followed this pattern. So this is all presidents and this is first term for our new terms, a new party. Those follow pretty close in line, and so has our markets this year, just a little bit exaggerated in both directions. So that's pointing lower. Meanwhile, if we look at the options data right now, the CPC is still saying that things are healthy and could go higher. So we're in a really, really weird spot right now where things could go either direction. I know we've been talking a lot about the Fed today, but I think the big thing this week and this month is earnings. And this week we have the biggest earnings announcements of the quarter. I think it's a 37% of the U.S. market cap reporting earnings this week. So I think that's what's going to make or break us right away in the near term. Big companies that I like, that I invest in, Meta, waiting on something for Apple. We've been waiting for a while. They've fallen way behind in the AI race. They're a pretty massive catch-up trade if they can do something positive, have some good news, buy out something that's going to give them a spark. But Meta, Microsoft, Robinhood today, Carvana today, that thing's been going crazy. Tomorrow, Apple, Amazon, Coinbase. So a lot of names coming up. And something interesting that I shared in Opening Playbook yesterday is that this quarter's earnings reactions are above average where they normally are. So they're above the baseline in both directions. So we're basically just seeing outsized moves to the upside and downside on stocks, which again just means more volatility, more unpredictability ahead. And ultimately, I think we're going to see some big moves in the month of August coming up. Now, I bought some protection. I normally don't. I normally say there's no point in hedging. You're just burning money. I went with an out of the money QQQ trade. If we get a 5% drop, it pays 700%, which is pretty nuts, with some targets in there as well. But for some bullish opportunities, I like right now I've been invested in ANET. I got beat up on it back in March, got punched right in the face, but been trading it now back on this rally, and it's doing really, really well, showing a lot of strength right now. This is one where I think you can play it off the back of Meta today. In my opinion, if even or regardless of what Meta reports, regardless if they're seeing revenue increase or decrease, as long as they say they're going to keep spending on AI, which is all they've wanted to do, I think that benefits a stock like ANET. So this is not an earnings play for ANET. It's more off the guidance of Meta. If Meta wants to keep spending, ANET should benefit. So if you wanted to trade ANET, again, they don't have earnings this week, so you should be able to avoid the implied volatility you can see here. 64% versus next week's going to be a little bit higher. So I'm going to trade the 1st of August expiration. And then I'm just going to go here at the, well, one strike out of the money, basically saying I think ANET's going to gain another, it's up 2.5% today. I'm betting that it's going to gain another 1.25% through the week, assuming Meta holds strong on their guidance and what they're looking to do in the future. And as you can see here, I just shown one contract here. It's over 100% return on investment, risking $45 a contract to profit 55. So let's just give you an exact number there. So that's 122% return on investment if ANET gains a little over 1% the rest of the week, just playing off of the Meta earnings announcement. So I'm going to go ahead and do 5 of those, and you'll see Thinkorswim's nice because it does all the math for you as well. So I'm risking $225 to turn it into $500 with a profit of $275. And again, just need it to drift a little bit higher this week off good tech earnings and guidance for the future. So I'll go ahead and send that one off. And I probably should have typed that for the chat. Steven, did you type it for the chat? All right, filled right away at 45 cents. So you should have no problem getting in. I'll type that in here in the chat. ANET is the ticker. 1st of August, expiration 122 call. And then we're selling the 123 call. So sorry, I'm typing this right now. This is right now at 45 cents. And again, you can't have ANET go flat or down. This is a directional trade. We need it to gain $1 from here. If it gains $1, you make over 100% return on investment. Another totally not Fed related stock that I like right now is Walmart. It still hasn't seen all-time highs since the April lows. It's been strong. You can see how well it held up on its 200-day moving average, while most stocks were like down here. However, it's not made the whole catch up yet, but seasonally speaking, it's a very, very good time to be long Walmart. Over the last decade, it's gone up every single time during this period over the next 18 days. So that puts you about July 17th based on this date, July 16th, or August 16th, August 17th, roughly, with a 2.5% move on Walmart as well. And a couple of reasons I like it. I think it's a staple stock technically. So if things do get rocky, people do get fearful. They move out of speculative, move into staples. That benefits Walmart because you don't stop buying groceries when things get tough, at least hopefully not. You stop buying new cars and watches. But it also has the discretionary side to it as well with their online business model, mimicking Amazon and what they've done there. That's really why it's been so strong over the last year or two. So I think it's kind of got a win-win situation here for Walmart with the seasonality pointing positive as well. We saw with the preliminary GDP this morning, spending is still healthy. So I think Walmart's in a really, really great spot to run higher from here. Again, it averages 2.5% over the next now 17 days because yesterday we took this one in the opening playbook. But those are my 2 picks for you guys right now, right here today. Again, this is what I foresee coming. The unknown, but nothing stable and steady. Nate, I really loved what you shared yesterday with playing the boat, playing 2 ways. Made a lot of sense to me. I really like that as well.
Thank you. And we traded ANET for 400% in opening playbook. Boom.
Yeah. Yeah.
Walmart was also on the new money career scanner this morning. So,
oh, wow. Good to know, Steven.
And a little pump for that. Somebody asked you, Graham, what was the net debit on the ANET trade?
It was 45 cents.
45 cents. Okay.
And then the max profit the max it would be worth is $1 Friday at expiration. So that's a 55-cent profit.
Perfect. Thank you so much.
And if you want to trade the basic calls, you can. They're just going to decay faster. So you're going to need a lot bigger move than we need.
Love that. The benefits of trading that spread there. Kane, thank you for hanging on here until the end. I feel like you often go first and then have to listen to everybody else. Now you've flipped positions. So thank you. What have you got for folks this morning?
Yeah, absolutely. I love listening to everyone. And so what I'm going to do is I'm going to pull the little gems that I heard from everyone and kind of put them all together, because sometimes you hear them independently and then you don't really have an idea of how it all fits together. So I loved what everyone said. We got Jack, he was talking about following that trend and being able to sell that premium, because what you really need to understand, and what all of these guys kind of talked around, and Nate sort of directly said it, was that you've got to trade the environment that you're in. And right now, this week, we have a environment of elevated uncertainty, elevated volatility, because we don't know exactly what's going to happen with FOMC. We don't have all these earnings coming up. We have employment situation at the end of the week. We've had all these other economic catalysts or potential catalysts that come out this week. And so we can't utilize in a high volatility environment, you cannot rely on your technicals and your indicators and all of that. There's certain environments where those are really good and other environments where they're terrible, like volatility. There's a reason why earnings events, most people tell you to avoid them. It's because most of the things that you normally do to evaluate what a stock might do gets completely destroyed by the volatility. It's also why news events also destroy trends and destroy technicals. For example, COVID completely changed the direction of the market. And that's because the news and the volatility has the potential to destroy technicals. So we have to understand that. And so what I loved about everyone is that each one of them gave their own little way of trying to do exactly that, of avoid what you might normally say is a good technical environment. That's why you also heard like Graham, like, oh, I'm a little surprised it kept on going up, because if you looked at it technically, it looked like you should have a pullback. It's that volatility destroys that type of analysis. So you have to recognize that, and each one of these guys gave different ways. You know, Jack was like, well, you got to sell premium, and then we have different spreads and different ways of capturing volatility, actually playing the actual volatility itself rather than price and directional movement. And then we had JD talk about his 2 sigmas out, which I love. He talked about PM. I actually went into PM yesterday with a 168 price target in the near term. So I don't know how that lines up with JD's methodology, but I love that we have ways of looking at the markets other than just here's an indicator, here's where we think this price movement is going to go. So that's really important. Other thing that JD mentioned, being contrarian. So I like his methodology, that 2 sigma methodology. That's a mean reversion. That's very different. That's almost the opposite of a trend following. And so true to his contrarian nature, that's more of a contrarian type of play. And then you had Nate talk about what we call in the business a tail risk trade, and it can even be called a pain trade, right? So if everyone is thinking that rate cuts are they're not going to happen anytime soon, then Nate is counting on all those people being wrong, and so that's a pain trade. But it's also a tail risk trade. It's a very small investment that could pay out really large. And if it doesn't, then whatever, it was $37. Okay. It's also, in my opinion, if you are inclined to go in with one lot, and it's a $37 potential fee to find out a lot about your investment personality, because it's all the way out to 2027. And so what's going to happen is either it's wrong, and you're going to watch that 37 go down to 10 or 5, and then what do? Are you actually going to wait until 2027 to actually take action? Because it's $37. Are you the type of person that's like, oh my God, I can't watch this lose, and then I've got to take some sort of action? Or are you the type that can be really patient and see if it plays out in a reverses direction? Or are you going to hold out hope? Oh my God, this trade is losing. I hope it's going to turn around. You're going to learn a lot about yourself. And if it goes really well, that 37 turns into 100. That's a pretty good gain. Do I take it? Oh my God, I got profits. I got to take this and run. Or can I let it ride? Am I the type of person that can let my winners ride and go up to $200, $300, $407, as Nate was saying, or all the way to the end, and maybe it goes up to $500. So you're going to learn a lot about yourself if you're willing to put that $37 on the line. So I thought that was really, really great. And one thing I wanted to say about JD's comment about the Fed and how he thinks that there could be a rate cut today. JD has a lot of faith in the institution called the FOMC. That's what I would have to say. In my experience, when I was managing portfolios, my direct job was to one of my mandates. In my job description was follow and bird dog what the FOMC is doing, and then report that to the firm and then base views on the firm. So there's a couple things that we want to understand about that is that the Fed only controls the Fed funds rate. The market controls everything else, especially the longer term rates. So when you see Nate talk about the TLT, you saw Graham talk about interest rates, that we have to understand that they're two different things. And sometimes they're just like everything else in the market. Sometimes they're correlated and sometimes they go in completely different directions. And what we also understand about the FOMC is that they are a reactive organization. They've never, ever, ever, despite what they might say their mandate is, they've never been preemptive. And they might have their desire to be preemptive, but they're always reactive because they're always looking at really long-term data when it comes to the market. Markets move fast. The market moves minute by minute. The FOMC is looking at quarterly data or yearly data or sometimes even longer data. And that by that nature, it turns them into a reactive organization. So if we see deflation down the road and the appropriate action, what they should do is maybe cut those rates. But what they're based on the behavior of that organization and the data that they're using, they are most likely going to be reactive and not do anything until it's way down the road, just like we saw that with transitory inflation. Right? So nothing was done until a lot later down the road. So understanding the environment that we're in and what is appropriate for that environment, the types of trades that are appropriate, is really, really important. And what I didn't hear, which I was super happy about, was anyone say, let's buy a call or let's buy a put. Nate did say, don't buy it. It's not a great environment to buy put. It's because of your volatility. Right now, high volatility, as Jack pointed out, it's going to make buying a put, buying a call expensive. And so even if you're right and it goes in your direction, as that volatility collapses, as we know exactly what the consumer confidence or sentiment is going to be, as we know exactly what the employment situation number is, as we know exactly what their earnings numbers are, that volatility tends to shrink and collapse unless there's further uncertainty down the road. And that means your value is going to be, your growth because of price increase is going to be counteracted by a collapse in the volatility. So it's going to make it really hard for you to make money or just buy a call, buy a put, those types of strategies. So you want to understand the type of regime that you're in. I heard Alex talk about the regime, and then pick your strategies appropriately